PayPal stock is our first Contrarian Goldmine episode. So, PayPal basically ended the week trading at the 52-week lows. They are trading at around $55 a share. They used to trade in 2021 around $300. So it's down a lot, and it might be a really good opportunity from a high quality company. If you want to discover, just tune in and let's find out, guys. So first, PayPal is probably one of the biggest online payment companies out there. When you heard about PayPal, you always think about safety. They own Venmo, which is one of the high-growing platforms on the United States, and probably their biggest asset is Braintree, which is a gateway that let customers pay using credit cards or debit cards on the online retail e-commerce section. Braintree offers more fraud protections and security features, and each feature in a lot of e-commerce sites, for example. It's probably one of the biggest assets on PayPal, and it's a really good part of PayPal. When you look into PayPal, I'm a client first. When I want to buy something overseas and I need safety, I always try to pay with PayPal. Or if I have the option to pay with PayPal, I always pay with PayPal because of the safety. They are really consumer friendly, and every time I have a problem and I talk to PayPal, they solve it really fast, and I really like that and appreciate it. So PayPal is down a lot. They used to trade around $300, and now they are trading around $55. And why is that happening? They are struggling the last year, and it's because PayPal used to be a really fast growing company. They were growing revenues at a compound annual growth rate around 15-20%, and now they are starting a new phase. They are a more mature company, and now they are expecting to grow high single digits, around 8% maybe, under 10% definitely, but they are still a really high quality company. Another thing that is the reason they are down a lot, it's because competition. There are rumors that Apple, Google are trying to be in the online payments as well. It's gonna be difficult to PayPal to compete with that. That might be difficult to continue to grow in the next years, but that's why this might be an opportunity. Let's analyze the stock. Let's look into the fundamentals of PayPal stock. So 61 billion market cap. They are trading at a P around 15, but the forward P is expected to be under 10, which is really good for a company like PayPal. They used to trade above 20-25 PE, and now they are trading under 10 forward PE. At the first glance, it looks really cheap. Let's analyze other things. The revenue growth in the last 5 years were growing around 15-16% CAGR. Now for the next 2 years, they are expecting to grow around 8% this year and 9% for the 2024 year. Their gross margins last year were around 40%, and their net margins around 15%. Their net margins are usually around 20%. Their cash flow margins around that, so it's a really high margin business. I like it. They have almost 10 billion in cash, and their long-term debt is 10.5 billion, so they can almost pay all their long-term debt with the cash in hand, which is really good. So a really good balance sheet they have. They don't pay a dividend, which is really good. They are down to almost 22% year to date. One good thing in PayPal stock is, since it looks like they are trading at a cheap valuation, it's expected them to buy a lot of shares. They have a plan to buy, I don't know, 5 or 6 billion in buybacks, which is like 10% of the company. So one key thing about PayPal, in the next year they will be buying back shares at a cheaper valuation, and the shares outstanding will decrease, which is really good for the shareholder. So it's a positive point for PayPal. When you look into our checklist, revenue, it's all check marks. The revenue are growing and it's expecting to grow. Slower growth, but still a really good growth. Their margins are really good. They are making money. They have low debt. Their returns on equity and return on invested capital are really high. Actually, 13% is really good for the return on invested capital. For me, their moat, they have some kind of moat. I don't know if it is wide or narrow. I still have to decide it, but for me, they will have a lot of competition. It's gonna be difficult in the future, and it will be uncertain. But for me, security. If you want security, you will buy with PayPal. That's for sure. So they have a margin. It's not gonna be away for the next year. So they having free cash flow positives, and they are returning capital to the shareholders via buybacks. And I'm expect them to do a lot of buybacks in the future. So to evaluate if this is a good opportunity, let's do our discounted cash flow for the next 10 years. This is my assumption. I will talk about my base case. My bull case, it's around a little bit optimistic, and my bear case is probably my worst scenario. So for margins, I do believe they will be around 20%. So I'm trying to be cautious. I put 19%. For the next 5 years, I'm expecting them to grow around 9%. For the last 5 years, around 7%. PE, I assume 80 PE. I know it's above the mean, but PayPal has a really high return on invested capital. They are a mature company. Their management is really good. They have really high margins. So I do believe they deserve a little premium. So I put only an 18 because of their growth will not be really high in the next few years. So I'm expecting them to buy back shares as well, and my discount rate will be my base 12%, which is always my I always try to have my discount rate around 12%. So I know the fair value or the interest value will be around 10%, which is the mean of the stock market, but I always try to increase my discount rate so I can have a bigger margin of safety. So bull case, bear case, and I come with a final intrinsic value of around 61.5. PayPal is trading around 55, which is under my intrinsic value. It might be a really good opportunity, but I will be honest with you, I don't own PayPal. My old interest, I follow PayPal for the last year. In the beginning, I was happy to buy PayPal around $75. Now I'm trying to be a little more cautious. I do think PayPal is a really good opportunity. They are trading at a low valuation, so I will think it's gonna be a really good investment. I don't own PayPal because I do think there are better opportunities out there, and inside finances I prefer other companies, but I'm still thinking into owning PayPal, but I didn't pull the trigger yet. I might do that in the future, I don't know, but at this valuation, $55, it is a really good price to pay for PayPal. And bear in mind, in the next few years they will be buying back shares at these low valuations, and it will improve the shareholder return. So I do think PayPal is a really good opportunity. So that's my opinion, guys. A really good company trading at a fair valuation, maybe really undervalued. I do really like a lot PayPal, but there are a lot of uncertainty about competition in the future. So bear in mind that. But as always, do your analysis, and I hope you find our opinion useful. And if you like it, please subscribe, guys. Bye.